11:08 EST. Today we witnessed once again the power of Fibonacci levels to the tick, completely contradicting everything that the world was telling us. Because we know that price and Fibonacci will override everything. Let's recap. When we came to the markets, we witnessed continuous, powerful collapse on S&P. But we know better not to acquire a position anywhere near reversal zone. What have I done? I respected what price had been telling me. I had taken pretty aggressive trades. My bias remained only long. We spelled out how critical it was for S&P to get out of reversal zone. This is where our third trade had ended, at this level. And finally price is blasting. How marvelous can this be? S&P showed us where not to acquire trend position, and if you know 4 critical rules, and if you respect what price is telling you, you know where not to enter and where to monitor for reversals. S&P is heading drastically further up, all the way to decision point 1. What are we witnessing on oil? Once again, reminder of the importance of reversal zones and Fibonacci levels. Yesterday, bearish news on oil meant nothing to us. We ignored it completely, and we bought here, because that's what the price had told us to do. And that's where we closed our trade 40 ticks later. And that's where we closed our room, because we said oil is worthless. It's still thinking, it's still deciding to break through this level. And that's all there is. Pure price for entry and Fibonacci for exits. 3 only bullish trades on S&P this morning. This is how critical this level is. This is exact same level, the end of the minor trend on 13 range that S&P is struggling at currently. So will oil pick up this theme? Once again, this been the reversal zone play, but oil had been pretty cumbersome. Reminding you, know what not to enter into. Our bias on oil remained short. The buying opportunity on oil was pre-market, nowhere near here. This exact same level where oil reversed from. Is that clear? This was spectacular reversal on weekly from the end of the minor trend. Exact same thing oil is showing potential to do currently. Know where the end of the minor trend is on 13? And if you're trading weekly, it remains as critical. This monumental collapse had found buyers. So, for every single reason you saw how much they struggled at this level, this is where trade had ended on 8 range, reaching first target point later. Correct? 3 trades from these levels back up, and finally buyers blasted through, but they taken a major pause at the end of the minor trend. And here's oil. I'm extremely actually excited to monitor for shorts on S&P, which would be drastically more conservative formation as long as there is space to reversal zone. You don't want to be anywhere near this level. Never, ever. Oil is very funky this morning. Very funky. You witnessed how much oil struggled at those very important and very critical levels. And oil keeps dancing in corrections. If you would take a look on the larger time frame, this is oil this morning. Buyers come in on oil 90% of the time pre-market. Very important to respect when oil is very, very conflicted and giving us only this morning, this. I'm in California, everything on Pacific Standard Time. Buying opportunity on oil was here. Drastically formed pre-market. Makes sense? So, let's recap what we accomplished so far. As my pretty aggressive trades that reached first target, struggling. I'm monitoring for conservative short on S&P. Major trend remains bearish. Thank you oil for finally moving lovely. Pretty aggressive trade which taken pretty long time. Moving my stop to break even. Second level respected. So what are we witnessing? Today you witnessed trades on 5, 8 and 13. You witnessed oil had been giving us very, very slow corrective motions and done the same thing. Collapsed, finally making up its mind, staging endless corrective moves, and now heading south, reminding you it's essential to know where reversal zone is. S&P remains bullish. So, 3 trades on S&P today and 1 trade on oil. So let's monitor oil, we'll update the results, and that's all there is. Pure price for entry and Fibonacci for exits. Formula remains the same. Isn't this magical? Decision point 1, decision point 2, the tick. And S&P is sitting very, very pretty. Buyers are so tired. The end of the minor trend had been reached. Know your levels. Price does not care about the news. Price only cares about where these levels are. As all of these levels are preset. They are not random. Oil was very, very clearly tired, exhausted, reminding you know what not to enter into. Our oil trade had made it to the second target so far this month as of April 24th, one of the slowest months on record. Out of 20 trades, 16 trades reached first and second target. A lot of times my first target is decision point 2 if ratios spell out so. Again, S&P we had taken 3 trades this morning. Out of 21 trades, 17 trades reached first target, 16 trades reached second target, and plus flew to third target or further on 10 trades. Again, reminder, multiple times, decision point 2 is my first target if ratios require so. This is Alpha Wave Trader method where we demonstrate the trades. Next class starts Monday. I'm off to teach. Love you to pieces. Look forward to hearing from you if you have any questions. Thank you so much.